What up, Devil? Sensei-tutum here with another video for you. So, this week we are at a very critical area for both Bitcoin and the S&P. So I want to narrow down on these two charts and focus on these. And I'm going to try to keep this video relatively short. Because we are in such an important area, I'm going to dive in a little bit deeper than I might typically on Bitcoin, because I generally like to just let Sam handle that on Fridays. But there's times when I just feel the need to step in and talk about it. Now, as you guys know, I say almost every week that I'm talking about this S&P chart, that if you are a crypto trader or just enthusiast, you should be very interested in the S&P chart, or any of the larger indices within the U.S. stock market, the NASDAQ 100, etc. But I like to use this chart specifically through the futures chart, the ES1, the minis. Okay, so that's what we're looking at here, and we're at a very important part of this chart, and there's a lot of things in the breakdown that has happened. By the way, this is everything so far for the last, I don't know, month, whatever, whenever I came back, month and a half, whatever it's been since this low, whatever it is, since this low, basically everything is currently playing out per expectation, right? So we're going to go ahead and dive into it and see how it's unfolding, because as these, just like you're driving down the road, and let's just say you're on a straight road that's really, really long, the closer you get to your destination, you might be able to start to see the end, the light at the end of the tunnel, as they say for the train reference, etc. So maybe for one of these scenarios, we're seeing the light at the end of the tunnel. And let's go ahead and dive in a little bit closer. You guys should have been keeping up with this. Well, I would imagine if you're following me on Twitter, you've been keeping up with this chart. Not to mention we talked about in the videos last week, but I'm doing more updates there than onto the YouTubes. But basically we have two options, and I, on Twitter I've been saying that there's multiple price pathways. All we need to do is break this parallel, which I've explained in video as to why that is. This blue parallel here, which is really the same as a base trend layer, or base trend line, I should say, of a channel that we need to break to form an adequate retracement for an X. Should we be in that situation, we do know that this X would be the second X of the formation, meaning that the projected pathway in that case is a third corrective leg down, making it a triple combination, or not a combination, a triple zigzag, which is a rare pattern. And old Toot, as you know, doesn't typically project for those things, but he currently is. I currently am. But we have these different scenarios that could play out. So I think either way, which is very important, that we are shaping up for a reversal in this area. Not quite yet. Just posted to Twitter to ask you guys if you thought that it was done or not. Spoiler alert, I posted just after that into the Discord to let the guys know that I believe that we would make the green box up here. And even since then, we've now got an external. We'll zoom in. Anyway, once we create this level, once we meet this level, we have several options. It could be a red ABC as labeled zigzag to this level. It could be a 1 and then put in a 1, 2 and then go up for 3, 4, 5. Now, if this happens, it then will become more likely that maybe potentially this is a 3 wave as opposed to a C wave, because we know that typically a zigzag, both waves tend toward equality, where in a impulse, the third wave is typically extended. So if we see this as an extended wave, then we will start to believe that, okay, that bottom end scenario, that double zigzag that ended here, wow, that's a lot more likely. But I'm still not there, just so you know. Even when we break out, I necessarily won't still be there, because as you see, this X has been sitting up here the whole time before we ever got this pathway happening, right? So, the charts are like driving down the road. You don't know what the road's necessarily going to look like. You just know you're going the right way. And this has now, our roads have shaped up this way. Because of that, then we can narrow down sort of the options on the other side. And one of the things that happened there is that this wave wasn't necessarily, say, halfway to this X. So that means that in order to get to this, which was just a standard retracement area between the 50 and the 618, in order to get to that standard retracement, you're either going to not get there, it'll be short, which would be the projected red zigzag, or you're going to have an extension, which then throws you off if it is a zigzag because, again, of the probable relationships in an impulse wave compared to a zigzag that you wouldn't expect the extension there. Now, but you go on probable expectation. Of course I do. And I will really take that into consideration. I would very much like to see it extend more than this, to be quite honest. Let's see, what is that? Let's just say if we got to that golden pocket from here, what is the extension? Where to go? Did I draw that incorrectly? There we go. That was weird. So a third wave would end, a standard third wave would end right there. So that would, I would typically like it to be with this sideways too. I would like it longer than a typical extension, right? Because you don't often get the sideways in a 2, but when you do, boy, oh boy, you can take advantage of it. Which is, why this long bias out of here that we've been talking about, we knew that we could go long. We've been through it again and again, right? That it's still going to go up. We've been, shouting from the rooftop. So we've been long bias. This is all working according to plan right now. If we're trading this, it's going great for us, right? If you're not trading it, you're at least, okay, this is doing what we said it would do. Meaning that maybe if you're just a watcher, Bitcoin enthusiast, something like that, that everything so far is according to plan, nothing going crazy, which crazy could be good in areas like this because it might be to the bull side. Unfortunately, not the case. One thing to keep an eye on, though, again, with this, if this wave does extend, is that this market, as shown in this mode and this correction, it is prone to sucker waves, zigzags with extended C's. This looks like a 3, not a C, and then this really did look like a corrective off to the side, but then it fell out, right? So that happens. Suckers. So we got to be careful for that. Let's zoom in closer.
Okay, let's go.
That wasn't me that said that. That was the music. All right. So I posted on Twitter just to get basically post there to say, hey, I want to do a video on the topic that you're getting now. And if there's enough response, I'll post it to the public. So that's up to you guys on Twitter. You're not going to see this until either you have given the response or not given the response. But again, this video will go to members, of course. Anyway, I posted it just for a little interaction to say, hey, that this is the way that I see this wave forming. Last week, was it last week? No, this was in a discussion I had with our boy Monty Crypto. Is that how I thought that we would definitely should be breaking out of this, but we zigzagged into this, which was kind of like, that would be not according to plan if we didn't break this and turn down hard, which we did, but now we did reverse out and have completed what is now required to be an adequate retracement for this X, this blue wave labeled X. I had it up here in the probable area, but really it only had to break this parallel, which is just, it's a pitchfork parallel in this case, but it would be a proxy for a base trend parallel. Just don't need to have both on the chart because they're literally overlapping, and I want the pitchfork. So yeah, we've broken out of that, which would mean that this short, or not short because it would be similar magnitude zigzag, A, B, C, standard type of zigzag, should it be complete here, and there's your 1-to-1 right in the green box, it would be an adequate retracement. So I just had asked, hey guys, do you think that this is done on Twitter? And of course I posted directly to the Discord after that hey, I do think we're going to make it to the green box. Let's show that. Oh, here we go. I still think we get to the green box. I mean, this is just the chart I posted to Twitter just to say, hey, that leave a little bit to trying to get you guys to be interested, right, on Twitter, while giving you good information. But on this lower degree, if you're trading intraday at this degree and you really want my help at that degree for your individual trades, sorry, that's not what I'm here for. That's not what I'm interested in. Maybe if you're in the Discord, sure, but not on Twitter. I'm here to educate, help you guys. I'm not here to trade for you. Anyway, so we're on our way there. Maybe it doesn't get there. Why did I say that I would think it would get there? Well, first of all, First of all, because this is obviously showing that it's trying to be an extended fifth wave. And an extended fifth wave would not typically end with this shit, right? Like we saw that fake out, that sucker's wave over here end on. See how it ended on and died? Well, it's not an extended fifth wave. This was a C wave or a 3. This, per my idea, is an extended fifth in play, so I wouldn't expect it to end this way. There's very predictable behavior that happens after an extended fifth wave. This sideways shit was not that. And then, of course, 1, 2, and then 1, 2, 3, 4, 5, 3, 4, 5. So the count doesn't necessarily work for it. Very extended 3. You get the longer 4. We'll talk about that in a second over on Bitcoin. So that does tend to happen there because this isn't very, you wouldn't normally expect this big guy to go with this little guy, but it's not too far off, right? It's close. And when you get that really extended third, you can see that shit happen. Again, hold that thought for Bitcoin. But that's where we're at now. I do think that when we do top on this fifth of the fifth, and it could get quite extended, it could go blow right through the screen box, it will be a sharp, quick decline. Of course, the higher that we get, the more we have to update where we think this will go. But right now, assuming that we finish around the area that we expect it'll finish, then we expect the decline to end around this area. Should happen. But again, you've always got to watch these roads as they go so you can make better determination as you get closer to your destination on which left, right, stop you want to make. So that's where we're at. I think we will get to here, decline swiftly to there. So if you're long, be careful. If you're long, be careful. And then, of course, if you know anything about extended fifth waves, what happens after them, there's a lot of things you can do to trade that extended fifth wave and what happens after it. If we're already air quotes in it, because this is all part of the extended fifth wave. All right, moving on to Bitcoin. Again, very important though, before we talking about Bitcoin, but staying on this chart, is these two charts are so linked. Should this red count be in, either way, you would, if this count makes it to this box and then reverses sharply, you would expect some sort of sharp reversal on Bitcoin in the same fashion. Now, there has been a little bit of decoupling going on. Just a little bit, not much. I mean, it's not enough to expect it to continue at this point, but be very mindful that when this finishes, sharp decline and what that impact could be on Bitcoin. All right, let's get over to Bitcoin. I didn't even have it up. All right, so this is the low time frame chart. So this is the last one that I shared to to Twitter. And basically I said that if we get beyond this 50, which really that is being, let's just say that's being bullish. That's being, because I do have an inherently bull bias, because what direction does the markets typically go? Currently my bias is of course bearish, but my base bias, if I have never seen any chart ever before, is going to be bull. Why? Because, and this isn't just Bitcoin, this is any chart. I mean, what do they do? Currencies debase, markets increase in value based on that currency. It's just what happens. And, they go up anyway. They inflate, but, of course, currencies debase as well. Of course, this hasn't been completely debasement, but that's just my base case. In any instance is bull bias. It's served me well thus far. Could be the permanent bear callers that get a lot of attention, but I'm not. Anyway, if we get beyond, I had said if we get beyond this 50, that I would flip bias. Why? Because my case thus far has been that this is a 1, 2, 3, 4, 5, but this 4 is now huge relative to this. I had posted over a week ago that on Twitter, if we broke this, that I thought that when we were in this wave down, and I said I think that we are in the final decline. And if we break this pivot, I may switch my bias. Well, not yet. I'm at least going to think about switching my bias. I said, and I did. And I haven't switched yet. Because, again, this is a very extended third relative to this wave. So there's your 1, there's your 3, there's your 4. Literally over 4618. So 1618 would be the typical extension relationship, wave extension relationship, and it's over 4 times that. So it's very extended. And when you see that happen, you can get these, let's say, extended in magnitude 4s, whether it be depth or time. As long as we sort of stick to, these this is where the theory does get a bit ambiguous, right? And people get upset about that. But I say it's skilled. And when it gets this way, you should just be aware. When in doubt, you know that things are in doubt, and right, and how can that help you? Oh, it's in doubt, so I'm not super attached to this bias of a down, of a bear market not being over yet. But of course, it doesn't give me anything of confidence off this low, which is really not a random thing to happen at a major low. So really, as I've said this whole time, it's pretty darn close. And of course, the more things that we count against the bear case, that's just ticking closer and closer to 50-50, right? But I will remain with this bear bias until we break this 50. And I just use that 50 as a baseline because I drew this base channel off of this 1-2. How many of you guys know this, you Elliott masters out there? And if you know it, didn't learn it from me. That if you break this base trend channel, that is where, as a guideline, you should expect that it's not a fourth wave. Just making 50% or 618, that doesn't have it. Nope. The guideline is that. And personally, I apply this guideline differently in different cases. If we get even into this channel significantly, that would make me want to flip. But it's very easy to point out the 50 because the typical depth for a wave 4, just typical, doesn't mean it has to be, just typical, is between the 382 and the 50, right? So if we break through that 50, we've not only gotten inside of this, breaking this guideline, we've gotten beyond the typical expectation for depth, even though we've gotten way beyond the typical expectation for length. So that's not that crazy. But when you get that depth with that time, start to think something different. That doesn't mean the bottom has to be in. It would certainly mean that my count is wrong, right? That maybe this would have to then be a B or an X wave of some sort at that point, I would say. But my personal bias would be to flip. And and as always, I remain agile in my thinking. But currently, I would flip. A lot of people have been calling for 23K. I've said ever since 23K is going to make me start to be really, think about the other way. Because of what the context is. Because of this context, I would really want to think the other way should we get to 23K because it's unlikely to fit this count. Doesn't mean that this can't, that from the high, because I do see very shitty counts in my opinion, but they might end up being right. This is an impulse to this level. I don't think so. I like it the way that I have it. Finished on a 3 here. Looks like a motive down. I mean, this here looks like the clearest 3-swing move of all time. It's very rare. You never want to expect to see two similar, two extended waves in an impulse. It just doesn't happen. You should consider something different, right? Tell me I'm wrong. That's fine. Tell me I'm wrong. That's fine. How long have you been teaching this theory? Okay. Anyway, maybe they're right. Maybe that trash count is correct that this is a fifth up here. And I hate saying that because now I'm thinking like, oh, shoot, do people I respect have that as a fifth? And I know for a fact actually saying that now that I do believe, let's just say, if Sam or Tony or somebody has listed this as a 5-wave move, just know that we have to share different ideas all the time. So that doesn't necessarily mean it's their primary. I very much respect all those guys and the members. There's a lot of members. I think that I've seen members do this. I just think it's trash. So, sorry. It's nothing against anybody that put it there. I think it's trash. I think it's a 3-wave move. I think it's about as standard of a zigzag as you'll ever get. Anyway, moving beyond that, let's just say that is right. That was a big old sidebar, sorry. And that is correct. Maybe, just maybe, this could be WX and then Y comes down. If that were the case, you're going to expect to get all the way back up here almost to 40. Let's just say well into the 30s. And I have heard people say stuff like that. I don't think so. I think it's trash. I think it's a trash idea. I mean, it could very well be it. But the way these bottoms work. Oh, one other point of note, and this video is 20 minutes. I'm trying to keep these things short because you guys don't watch them so long. A couple of you do. Comment if you get to the end. I always say that, and a few of you do, but not that many. You guys just don't watch long videos, and I just can't keep my mouth shut, so I don't know what to do. In any event, in Bitcoin's history of corrections, it has never broke a 50 of a previous swing high in that of an extended correction and not been the bottom. That's another reason I'm using this 50. Now I'm being aggressive with that because by my own back testing, I would think that, this could be adequate for that back swing because it's so big, but really it should probably be this one. But if you get up here where you need to for an X of this magnitude, or of what some people are talking about, getting up to 30 and then dying, that would, and this is Elliot, all that aside, this is just my personal observation of the chart. Go back and back test it yourself. It is never taken, of the move down, taken from the most recent swing high, the most recent swing low, and broken that 50 of significance on those pivots. Now, if you try this and you can't figure it out, let me know. Maybe I'll do a video or show you, just show the chart or something. But we break that 50. It's a little aggressive. I'm going to flip my bias. It'll still be close, right? But I'll flip to a bull bias. We break this 50, going ham. It's a wrap. All right. That's it. Toot out. Wait. Don't go anywhere. Sorry. Nobody stays this long, so I'm not even going to write in anything to make sure you stay till the end. But remember, like I said, with the ES chart, where even in either scenario, I have it topping soon with a sharp decline. I don't think we're breaking that 50 anytime soon. So just keep that in mind. I do believe that we've already returned to this channel. We're going to need some consolidation down here before we get out. I personally think. Could be wrong, but I do think that the ES will turn sharply. And when that happens, so will Bitcoin. Needed to throw that in there at the end. All right, dude out.